and change topics into another very fun one, project finance and project funding, and talking about the funding gap and how we can scale the market. Again, I think this is the last panel of the day, so we will try to reflect also what we have heard and build on it. I'll ask an excellent panel here to reflect also. Feel free to reflect on what we have heard. So I guess I don't have to repeat too much of what we have heard about massive funding gap, both triple crisis or many planetary crises, climate change, mitigation, adaptation, and the biodiversity one, at least for which nature-based solutions offers an excellent solution. But yet we're looking at like a 700 billion annual funding gap by 2050, and cumulatively about 11 trillion or something. So we have a big task. Obviously, we did discuss just previously that the market is voluntarily, and there is a lot of initiatives, which is great. I guess policy is lacking behind, and that's why we are in the situation. But I think there is collectively a big role that corporates, investors, consumers, and civil society, and all of us can play. So very pleased to have today 4 excellent panelists with me. Mark Baker, co-founder and CEO of Carbon Tanzania. Miguel García, Managing Director of Carbon to Nature. Michael Yu, Director, Investment Origination, the Nature Conservancy. And Petri Lechton, an expert for private sector investment. So I guess we have people from the project side, with direct experience on the ground, and then on the project development side, and also on the investor side and donor funding, blended funding. So a really interesting mix of panelists. So maybe I'm going to turn to you, Mark, first. Carbon Tanzania has been working on the ground for over 15 years with communities, with the projects from the ground up. Can you please explain a little bit your experience and also your experience lessons with nature-based solutions, and how have you solved this funding gap, or whatever your
Sure. Experience. Thanks, Hedda. And I'm going to do this without any acronyms. Okay. So when we started Carbon Tanzania and validated our first project in 2011, we did it with a lot of sweat. And there wasn't really a market. And we went out there, myself and my business partner, and made the market within the tourism industry to buy these carbon credits that we were developing. And at the same time, we realized that we started to engage with the government. And one of the things I've sort of heard today about scale, and I've been surprised is sort of missing, of how important it's going to be to, when we talk about increasing projects, we also need to think about in the context of the legislative frameworks within the host countries. That's going to be really critical. We then went on to develop projects under VERAR across 2 other landscapes in Tanzania. We're currently on verification 4 on those projects. So we've been operating for long enough to have enough experience in this space. And again, through those projects, we finance them with blended finance. A little bit of equity, obviously as little as we could give away, a little bit of cash flow, USAID, other donors, and some strategic partners that enabled us to meet some of our, especially within the free, prior, and informed consent, to meet those requirements working with conservation NGOs in Tanzania. And we're now at this stage where we have 2 other large landscape projects. We're working over an area of about 25,000 square kilometers. And we have, over the last few years now, started to work with the Tanzanian government. We've been key in the development of the carbon trading regulations, which we see as a really important part of de-risking investment in Tanzania. We're working with VERAR and Space Intelligence on the jurisdictional framework, on the mapping, so we are able to scale now within Tanzania projects and do it relatively quickly. But of course, it all comes down to the finance. Partly to get the money to develop these projects, okay, fine, but who's buying them, and are they being bought for the right price? And I think one of the voices that we want to hear from today, and it's great that we're sort of wrapping up the day with this session, is to really listen to those of us with a lot of dirt under our fingernails in this space and think about how we expand it and make it work and make it high integrity and really drive this process forward. Thank you.
Great, thanks a lot. So maybe just before we go to the next question, a quick follow-up. What's your biggest pain point? You mentioned the journey. I guess very interesting to hear. I'm wondering, because we're running out of time, how much is it? How can we go faster, right? Because you don't have, not everybody has 15 years to start everything from scratch. So how can we speed it up? Maybe if you have some advice on that. And in terms of pain points, you mentioned, is it the demand side now, or is it the financing? Where is the biggest pain point right now on your side, or where you see for your business to grow?
Well, I think if I go to the second point first, I think we've been able to build partly through realization that we need to spend a significant amount of money on communications. We need to really look at the social value being created in our projects and articulate that. And so we've been able to build a pretty good reputation. So we don't have a problem selling our credits, and I think we're selling them for a pretty good price, with a pretty good upside. So that part of it is there. In terms of the finance, from my position where I live in Tanzania and where I work, and I hear people talk about risk, what I'm thinking about is the risk that's being held by some of the poorest people in the world. That cannot possibly be fair. And I think the finance in this space and the corporates in this space need to start to get their head around the fact that what they're investing in is not plastic buckets. And we are talking about people's lives, opportunities, economy, in parts of the world where there are very few economic opportunities, and that's risk I think needs to be shared both by the investor and by the project developer.
Great. We'll hopefully get some reflections from the investors on the investment side. Maybe going to you, Miguel. You're also working on the project development side, but it's a little bit different. Corporate from Iberdrola, you mentioned, and you did the presentation from a corporate subsidiary. Tell us a little bit about Carbon to Nature and why did Iberdrola launch a project developer, and your experience. Thanks.
Okay. Yes. Why? I think that is easy answer. Iberdrola is the largest energy company in terms of investing in nature. The explanation is a little bit simple because the nature is providing us the power we need for our production, and also because we have a very strong commitments in terms of scope 1, 2, and 3. We need to go together with our clients in the decarbonization process of our clients. And now, starting in 2007, when we started to invest in renewable business, we started to provide green energy to our clients. With that, we are helping them in the decarbonization process. But now, Iberdrola wants to go beyond that. And in addition to that green energy, we would like to provide also high-quality carbon credits to support them in the decarbonization process. Okay. So another interesting point for the topic of this panel, finance, is Iberdrola is the largest company in the world in renewable energy business. So that means that we have a very good expertise, I think, in how you can work with the business model. I see a lot of similar things between a large renewable project and a reforestation project. 40 years period, 50 years period, very intense capital at the beginning of the project, a lot of risk management because you don't know or you are not sure about what will happen in 20 years. So we are bringing all of that expertise in how we are managing our renewable energy business into this nature-based solution business.
Great, thanks a lot. I think that's very interesting to hear, and certainly I think there's a lot of lessons for the nature-based solutions to drive on, and we don't have to reinvent the wheel. It's interesting to see because I think in my mind, for some reason, the utilities haven't been at the forefront, and really nice to see that to step up. And maybe just a quick follow-up on how do you see more broadly the peers or the other utilities? Do you see other companies getting more active and going in this direction?
Yeah, I think that it depends on the core business. I think that, as I said before, Iberdrola started to focus in green energy and renewable energy in 2007. So it is true that we keep part of the utility traditional business in distribution and transmission energy, but we have started to invest a lot of money since then in green projects. Okay, so I think that is our difference with other utilities in the market. But that said, it's true that in the last year you could find another energy companies who are starting to invest and who are coming to this business.
Great. And we often hear when we talk about investing in projects that projects say that there is not enough capital coming, and there is not enough, especially early risk capital, and then the investors say there are no bankable projects. So how do you see that on your side?
That is a very interesting question. I think that it is not true that there is not capital willing to invest in this market. We came in May, and in only 5 months, we have found a lot of interest on investing in this market. I think that the problem is that there is a gap between the interest on investing and how the investor, and I am thinking more in institutional investors, banks, they are interested, they are willing to learn more, but I think that we need to do a better job explaining our business model. I have a similar situation in my experience when we started to work in Iberdrola in 2006. I remember very well a lot of meetings with banks trying to find project finance for our offshore wind projects. And I remember very well they didn't understand anything. We received a lot of questions about how that is possible, how that is working, how are you calculating the electricity that you are producing? What if there is a tsunami? What if there is a third world war? I don't know, a lot of things. They want to understand how the business model, because at the end of the day, you are asking money for a project for 40 years. And that is true, that is a very long time period. Now, I can tell you that every single project that we are doing in Iberdrola in renewable business has at least 50% loan-to-value project finance without any problem. Banks today, they understand very well the business model. You can discuss with them. They understand the risk. So what I'm trying to say is I think that there is a similar situation today. I can feel that, and I think that we need to try to explain better them, and maybe we need to use business model that they are able to understand in order to be able to get that finance.
Yeah, exactly. I think there is a big need for that. So really, really great to see this new company and doing that job. So Michael, how are we going to get there? How are we going to get there to where the renewables are today, coming from the impact investments? I'd love to have your perspectives.
Well, it is a very, very challenging environment. So NatureVest is the impact investing arm that sits within the Nature Conservancy, a large NGO. And our focus is anything involving natural capital across the world. And a big part of that is trying to catalyze the global south, where impacts are huge. Whether it's regenerative soy in the Cerrado or sustainable timberland in Indonesia, these are all projects where we're actively talking to our project teams and trying to partner with asset managers and socializing it with potential investors. I found that the challenge is that investors, they want institutional investors in particular, they want the high impact return on their investment, but they don't want the risk associated with investing in these regions. That can be sovereign risk, that can be reputational risk. What's the strength of the land tenure laws? How is the history with the indigenous people? And then that's not even getting into the economics of it, about like a 40-year investment or a 20-year. So I think it's incumbent on NatureVest. My job is to find ways to de-risk it to the point where they can come in. And that can be through working with DFIs, trying to get a guarantee. So for instance, TNC, we've been doing blue bonds, where we work with sovereign countries to do a debt for nature swap. We'll refinance out some of their existing loans at a lower rate, and then their savings on that rate is dedicated toward nature positive projects, and we often get concessions about they'll establish a marine protected area or something. But those bonds are insured. They're politically insured by the U.S. Development Finance Corporation. So if, for instance, if Gabon chooses not to pay, then the U.S. Development Finance Corporation will step in and make that payment for us, and then assume that obligation from the government of Gabon. And so now Gabon all of a sudden owes the U.S. government this money instead of us, and that has a lot more sort of heft behind it that they're going to make good on that payment. And so you can see that actually, interestingly enough, Gabon went through the government change shortly after we closed. And you can see, our bond on the secondary market did not dip as much as all the other bonds because we had that political insurance on there, because people had faith that out of all the obligations of the government, they think the government, the new one, will make good on this obligation. So I think there is an important role for guarantees, for DFIs to come in and take on some of this risk. For other risks, like reputational, I think TNC can serve a valuable sort of canary in the coal mine for that. TNC is probably the most risk-averse organization out there, if not, in the top 10%. And so if we can get comfortable, if I can get the business units in Brazil or Indonesia comfortable, and they have to deal with communities on a day-to-day basis, that we're respecting the local peoples and their rights and their history, that usually provides enough comfort for investors to come along with us. And then for these other issues, I think the catalytic capital, the first loss capital, is incredibly important to have a well-thought-out blended capital stack. So one example of that is we're working on a carbon fund now with a well-known asset manager, and the goal here is to provide an end-to-end financing for projects that will create credits that meet TNC standards of biodiversity, additionality, and importantly here, community benefits, like above and beyond what's typically seen in the market. And we're going to pair this with our Natural Climate Accelerator, which is a philanthropically funded accelerator that gets projects from sort of concept to feasibility that will feed into this. And we are trying to explore ways to get guarantees in there, first loss capital, technical assistance facilities, and corporate offtakes. So I think all these are playing into it, not to try to create sort of the run-of-the-mill credit, but we want to actively go into geographies that are riskier, that investors don't really want to go into unless they have these credit enhancements, and also to create projects that are providing more equitable community benefits that, again, are above and beyond sort of the standard. And so I think it's important to really think through the capital structure. What are you trying to achieve with this? How will this fund ultimately influence the market to get others to copy us and hopefully set a new high mark in what we can do in this space. So I do think there is a lot of investor interest out there. They kind of need to hold their hand and pull them along with a lot of people sort of urging them step by step along the way until they can finally get to where you are now, where they're coming in without all these other sort of bells and whistles.
Great, that's a lot of very interesting points there. I think insurance and green bonds. I'll just follow up on one thing. We are at a corporate investments conference, and it's true that if you look at the carbon markets, it has been kickstarted. The exponential growth in the past, let's say, 5 years has been actually catalyzed by corporates who went up on the value chain and became investors themselves. So I wanted to just maybe follow up on where do you see their role, and obviously their capital is limited. So can we be smarter about how to use their capital in a blended structure? Yeah,
absolutely. And I think corporates, if you're trying to work on your own supply chain, that's a great way to tell a powerful story. And I think there's a lot of catalytic investors that want to help you with that. I think I'm talking to a lot of foundations that want to do supply chain work, and so to the extent you can influence your own supply chain, talk to where you get your materials, I think that's super critical. Acting as an off-taker and having sort of that price guarantee locked in for these kind of projects, it's invaluable. I mean, investors, they get paid either through the sale, annual sale of something, carbon revenues or timber, and then ultimately, I guess, the asset appreciation at the end if it's like a forest land. But that annual revenue is just a simple price and volume, product. we can get the volume down. We know the timberland models. We know what a sustainable harvest is. We know how much we can estimate how much carbon is going to thrown off, and that's easy for investors to get their head around. Less easy is the volatility of the carbon markets. What's this going to look like in 5 years? If you can have a contract in hand saying this is who's going to be buying it, this is their credit rating, this is the price, that will really, really drive people to come in the door and be willing to fund these projects up front. And so I think being an off-taker, being involved in your own supply chain and being able to encourage your own suppliers to play along with it, I think is important as well. And then finally, anything in terms of catalytic capital or technical assistance, I think would go a long way as well to giving other investors in the capital stack additional comfort.
Great, that's really great to hear, and I think that circles back nicely what you have said, that once we have the PPPs in the renewables, that would be so much easier. So let's hope that we can get there. Maybe just going to you now, Petri. Heard a lot about blended finance already. Carbon Tanzania has used it, and Michael is using it in their structure. You've worked a lot with DFIs and donors and institutionals. They are just very slow. How can we make it faster? We don't have time. If you have any ideas, insights, how can we work better and faster with more collaboration or coherence with also the public side of the equation?
Okay, thank you, Edith. Maybe I should tell a little bit more detail what I do. So recently I have been an expert in a facility called Forest for the Future, and we are advising the European Commission, the Department of International Partnerships, in their interventions in forestry, interventions, development finance, and now we are talking about global south, say areas outside Europe. And I think that when I just look at now recently what say within the European Commission, there is a kind of let's say shift. It has been going a long time already, but now it's really to shift from this kind of conventional development cooperation to new kind of cooperation where we really need partnerships with private sector and finance organizations. And there are instruments in place that intend to catalyze private finance and catalyze finance from different sources. For example, the European Fund for Sustainable Development has different instruments, for example, guarantees, and many DFIs, especially European DFIs with other partners, have applied those. Those are funds that are mainly financing private sector in these developing countries. And I think that means that these DFIs can take more and more risks. That's not probably enough. I think it's important that, like from these, let's say, donors, that we could package support packages in the landscape, for example, so that there is because there are many things that we still need grants and we still need technical assistance. We have problems in governance, capacities, and so on. So I think it's just how we combine all these.
Great, and we just discussed about the importance of this price price signal or the demand side. Do you see any role for DFIs or governments? And again, it's mind-blowing that everybody understands that you need a feed-in tariff for renewables 20 years ago, but somehow the politicians don't seem to understand that you need the same sort of price signal for nature. So is there any role you see for advanced market mechanisms, some sort of price guarantees? We have seen that happening in methane emissions from the World Bank pilot auction facility or some others, but do you think there is a role to try to lobby that direction?
Well, I must say that I'm not sure. I haven't thought about that from that angle, but I would say yes in that sense that of course it would need let's say kind of if I think the whole development scene, some partners in countries, that I think that, for example, European Union it can cooperate with other partners having this kind of policy dialogue with countries, so it can have actually quite weight. So I think that it can be, it's possible.
Great. So that's good to hear. I think really what we need is obviously, again, there is a lot of capital. It's just how we make it talk, how we match the right flavor of capital to the right stages and risk. So maybe going back to you, Mark, you mentioned a really important point on the governments and the scale. One of the other things I think gives a lot of hope to people and discussions coming back, for example, from New York, is how now the Article 6.4 mechanism is developing and coming back over compliance markets. They still need demand as well. But do you see like this convergence maybe of voluntary and compliance, and that will be helpful? And how do you work with that? I mean, you already explained how you're looking at to scale in Tanzania, but maybe if you have reflections on that.
Yeah, reflections on that. It's a big question, isn't it? So realizing that this is an inevitability, I think, we have been working very closely with the Tanzanian government on development of some of the architecture in government. And this is pretty critical because whilst there are parts of, and I think Tanzania is probably quite representative of many governments in the world. They're hearing a lot about this potential for finance. They're hearing a lot about carbon finance. Don't really understand necessarily what the rules are. Don't necessarily understand how to draw that finance into the country. And certainly from a monitoring, reporting, verification, especially meeting UNFCCC, there's a lot of questions from elements of government as to how they build the architecture, and that's going to need support. And I think that's the sort of support that's also very much, if we look at what the Norwegian Climate Initiative did in Tanzania, the very, very key part of that was the development of the National Carbon Monitoring Centre. So I think there is this role within government bilateral relationships to support the creation of the architecture to enable greater corporate investment and de-risk that corporate investment within a country like Tanzania. I think, we've heard the word journey being used quite a lot today, and I don't want to use it again, but it's a journey. And the problem is that time is pretty critical. And, I think Tanzania is going to be one of the first countries to hit this jurisdictional red framework. It's going to be one of the first countries to really start to hopefully get this architecture in place. I speak to ministers and permanent secretaries and we work a lot, but the key problem is that within the architecture of government, it needs its own carbon unit. And I think we're going to need to see these governments develop new types of infrastructure within government to be able to even have the conversation around bringing in more and more finance. But I think the bottom line is there are plenty of people in the Tanzanian government, plenty of people saying we're bringing carbon projects, we're bringing finance, but where is it? And how is it coming? And it's not really there yet. So there's a lot of expectation, I think, being set without really revenue flow. So that's also dangerous. And so, what's that going to look like? I don't know.
No, but it's great to hear, and you're right. I think that one of the key topics we have heard about also, like the capacity building, definitely we need that on the government side, also on the local developers, local capacity for entrepreneurs, SMEs, right, to enable that kind of project development to grow. Maybe I'm going back to you, Petri, on the, also often hear about, again, if you look at beyond the corporates and going to institutional investors, clearly carbon is not enough. You need to go beyond carbon. Maybe if you could reflect on that and explain how do you see that, and how do you see that carbon as a tool for catalyzing that permanent transition or transformation?
Yeah, thank you. I think that we have problems to scale up. I mean, I think that we have learned it already today, and especially in these conditions in the countries that we are working, we have like very unsecure land tenure and probably government is the absolute owner of the land and the forest, but then we have communities, smallholders, etc., without the proper land tenure. So we have quite complicated realities, and I think that here I think it's possible to scale up in many ways this. But if I think like the kind of earning logic what we should have in place, it's quite important that at the same time when we, for example, have a, let's say, restoration project or which will lead to conservation, it's actually quite important that at early stage or also in the long term that we can kind of integrate at least part of that to some kind of value chains, whether it's non-wood forest products like we learned earlier today, or even in the long term wood products, because that's the long term thing that will be quite important for these livelihoods. And here actually I think that the carbon can be a kind of catalyzer. I would say that carbon payments can be a kind of performance-based incentive to build up the assets, and I think there are good examples. I would say that, for example, there is a NGO called EcoTrust in Uganda. I think it's an excellent example how they have been building up this kind of agroforestry with smallholders, scaling up to over 10,000 smallholders and having like quite significant area. And the idea is that after some time they will be receiving these carbon payments, and then after some time they will be generating cash flows in a sustainable way from these assets.
It's a really great summary. Maybe coming back to you, Miguel, is that something you're also looking at beyond carbon, or is the focus purely on your side on the carbon credits?
No, I like that question because that was the focus of our panel this morning. No, I think that we all need to go beyond carbon credits. That's clear. I think that the first step would be biodiversity. I think that there is a very interesting discussion between how we can put value in our balance sheets, trying to capitalizing nature capital, okay? I put this morning as an example the GDP calculations of the countries. I think that we need to open that discussion because accountability has to be the right way to explain a situation of a company or a situation of a country. Public accountability, okay? I think that the reality today, both companies and countries, is really very different than the reality we had 20 years ago. But if you analyze, our accounting rules are quite similar in terms of how we are putting in our balance our investments. So that's why I think that we need a discussion to find the way that we can put the right value of our intangible assets in our balance sheets. Iberdrola is investing on that direction because we are confident that in the following years, all of those assets will have an added value in our balance sheet, as we did with renewable business 20 years ago. But it is true that maybe today we are not sure about how that will happen. But that is our task, because I am not sure about the public sector promoting this discussion. I think that that is something that we need to do as a private sector, and we need to put that discussion on the table.
And no, that's very interesting to hear. And have you seen, with Iberdrola's customers, have you seen any appetite for biodiversity credits yet, or is that too early to say?
Okay, yeah, yes, but I need to explain a little bit more. Our large clients, like, I don't know, Microsoft, Tesla, Google, we have already PPAs put in place with them for providing green energy, because they need that green energy for following the decarbonization process. That's clear. They need data center, and you need power for the data center, and the only way to reduce your carbon footprint is having green energy. So they started to talk to us saying, okay, can you provide us, in addition to green energy, carbon credits or any other way to help me with my decarbonization process. So if you are asking me about large clients, large corporate clients, the answer is yes. And we have already some deals like that in our portfolio. But it is true that talking about retail business, minor clients like you, like me, we don't see yet any interest on that, because I think that people is more focused on having power at home and trying to reduce the bill as much as they can, and we don't see yet that interest in our clients.
Yeah, it's a tricky one, and then you have to figure out the claims as well on the biodiversity side. Maybe Michael, on just coming back on is there a role for you think on the financial side, investors' role to also create demand and bundle these credits into some of the financial products? Sorry, it's a kind of ad hoc question, but
I think. Well, I think we, going back to Petri's point on like the agroforestry and eco-trust, I think we need to do more bundling of projects themselves, not just like the carbon and biodiversity credit, but like, I work a lot on forestry, agriculture, and renewables, and even within TNC, these three verticals are kind of butting heads. Like, land is a scarce resource, and the farmer, if you take land and put it under renewables, it's less land for growing food. If you're investing in forests, people are kind of ignoring the agriculture, or it's taking funding from the same sources. But I think we need to find a way to like integrate all of them together. If you have grazing land, you can put solar in some places on there and put trees along the side. But like the problem is all investors are forestry investors, or the ag investors, or the renewables investors. There's no sort of integrated land management investor. And so I think when we talk about like biodiversity credits, it's trying to create like a proxy for that sort of holistic approach to like, this is really what we care about, is the biodiversity. But I think we need to push ourselves to think bigger, to get our companies and clients to go beyond what probably is too narrow of a mandate to if you're forestry, you need to start thinking about ag. If you're ag, you need to think about solar. And so I have that same problem. I'm trying to get the renewables folks to talk to the agriculture folks to see if we can do agrivoltaics. TNC owns 500,000 acres of grazing land in the U.S., and I don't think there's a single solar panel on any of that land. So I think it's a problem that, I think the biodiversity credits can help, but I also think that there's a fundamental sort of disconnect between these different verticals that needs to be addressed, very quickly, because there's a lot that can be done within this space.
yeah, no, that's a really good point, and I think that we should keep reminding ourselves, and the respective organizations, we can't succeed if we don't create more synergies. However, on the ground, the realities could be quite different. I'm wondering, Mark, how you reflect on like implementing multi-revenue stream and all the combining. It's already hard enough to do carbon. Maybe if you can share some of the realities from the ground, that would be helpful.
Well, I think, we transfer just over $4 million a year to communities in Tanzania where we're working. And probably half of our company is focused on the revenue transfer. So 60% of gross goes down to local communities, and they make the decisions about how that revenue is spent. Now, I think in the context of Tanzania, we're actually quite lucky that we do have a structure for decentralized natural resource ownership, and we have a Land Act which enables people to own land as a community. And they're the key sort of basis of the asset that allow the contractual process to be designed, and within the contractual process you incorporate government that then manages the finance as well. So you have to create that. And of course, there's more and more digital technology to allow us to transfer large amounts of finance relatively quickly to wide groups of people, and also to create internal financial instruments at a village level, such as a conservation bank that's linked to conservation, like a cooperative bank that's linked to conservation. And we can capitalize that bank to allow people to lend money at a project level and start small businesses. If we think about layering the finance, and we are looking at a biodiversity project, so we're sort of having this conversation. And yeah, there are, I think, I would say in most countries there are governance systems that help manage finance. So that's existing, and don't try and create a new system. Work with the existing government system. Just try and drag in the auditing a little bit closer. But technology can really help us do this, whether it's to direct cash transfers to individuals or to improve the way finance flows, and is really, for us, it's about then understanding and monitoring the social value. What's the output? Great, built a school, great, 66 kids have university education, but what's the output? What happens then? And as we're talking about these long-term projects, you are investing in a lifetime of people, an entire generation. So we have to get better at the social value. I think there is always a lot of conversation about the finance at a community level. I think people are very, very capable of taking care of this decision at a local level and making this finance work for them and their community. Don't see that as a major problem. Making the monitoring more complicated, well, technology is going to help us do that. So yeah, doable, better technology, more effort, focus on the social.
Fantastic. On that note, we have only 5 minutes left, so let's see if there are any questions in the audience. You are the next one.
Thanks. Hi. So Tom Stevens, Fauna and Flora, a large NGO. I just wanted to pick up on the point of risk, and I think that's the word I've heard most today in various forms. And it feels like the market and the supply side is working its hardest to de-risk all of this for the investment side of things, and understandably. Mark, your point at the beginning around sharing risk, I think, is an important one, where we have real risk on one side in terms of biodiversity breakdown, communities, etc., and corporate investment risk on the other side. Those are two different things. Could you just expand, or if the panel can expand a little bit on how they might see risk being shared more equally across that spread?
Question, who would like to start? Yeah.
I can perhaps answer that just specifically from our example, and we can build risk in terms of contractual relationship with the communities that we work with. So, for instance, our contracts with communities, which are 30-year contracts, we specifically say we are going to give you this much money for each credit that we sell, and we will have to share that burden if we don't hit that, and that pushes us to then say, well, we're only going to sell at this rate. So I think from a project level, that's a discussion that can be had. I mean, the point I was making, of course, from my perspective, and that's where I live and spend most of my time, is that we're already seeing the impacts on people across countries like that of shifting climate. We've got an El Nino this year. Rain started today in northern Tanzania, immediately into a 25 mm rainstorm. Roads are a mess, problem for grazing. So the risks are already there. People are taking the burden, and I think we need to get better at thinking about how, at our project level, we can hold that risk, but we have to share that risk with the buyers as well, who buy our credits.
Anybody else on the?
Yeah, I would like to add a reflection around price, because risk is always related with price. I mean, if you are investing 1 million, but you are getting 10 million, I am pretty sure that the bank or the investor would be very happy to manage that risk. I think that the problem is that we are not translating properly the risk of our projects to the price, perhaps because the company who is purchasing our credits, they are not understanding that risk. I mean, when you are trying to explain a business model to an investor and you are telling them, okay, you need to pay me more because I need to have a IRR of 15% because this business is risky, because for making 5% of IRR, I am not investing on this. I am investing on, I don't know, making tomatoes or any other, yes, or renewables, yes, with a PPA of Microsoft, yes. So I think that that is another discussion that you need to put in combination with risk and the price that we are making from our customers, or from our investors.
Yeah, I would just add that it is right now a difficult pricing environment. I mean, you look at Brazil, their sort of CDI rate is 13%, and so that's like the risk-free rate. So like you put a spread on top of that, and all of a sudden you need 15 to 18% to even sort of be compelling to investors there. So I hear you on the pricing mechanisms, but we need to find ways to de-risk it enough to get that price down to really, really as close to like that risk-free rate as possible, because it is high right now across the U.S., Brazil, everywhere.
Yeah, great. I think we had another question.
Yes. Hi, everyone. My name is Natalie. Together with my partner, Victoria, we are co-founders of reforestation project in Ukraine, first and only project. And we are dealing with local communities and with private landowners. And now we are on the process of scaling, and we have possibility to plant starting from 5,000 till 30,000 hectares per year. And we need your advice due to the very interesting conversation. Whom can you advise to be the best partner and the best investor for us for fast and safe scaling right now? Thank you so much.
Thank you. Who has any tips? Michael, can you?
So like our mandate, we can only operate where TNC has a presence on the ground and has like inroads to the local communities. So I need to understand. I don't know what our presence is in Ukraine or the region, but I can certainly, we can chat after this and see what resources TNC might have over there.
The only thing I can say is I'm totally on your side.
And Petri, did you?
No, I was just going to say that maybe this question could be addressed to all of you here. I mean, because there might be. So.
Yeah, hopefully you can. Yeah, in the drinks reception, there will be plenty of partnership to be made. Do I have 1 minute left, or no? On that positive note, thanks so much for
we
this
can ask.
inspiring
Do
discussion.
we have 1 minute left? Let's put our hands up. 1 minute left?
Okay,
Yes.
so I just wanted to ask each of our brilliant panelists in 30 seconds to tell us something that gives them hope. What gives you hope? How are we going to close this funding gap so that we can go to have some drinks with a good spirit? Michael.
The corporates that are here, the institutional investors, I think everyone's rowing in the same direction. TNC, I hope we bring sort of the best-in-class science to get the impacts as sure as they can be in these uncertain times. But I think people are being more creative than ever and more flexible, and I think the alliance of institutional investors, corporates, DFIs, NGOs, like I think we can get across these sort of this valley of death between these pilot funds and into the point where true and significant amounts of capital are flowing into these projects, and to get catalytic change. So that's my hope, and I expect to come back next year to see a bunch of really successful projects.
Thank you. Mark?
Well, it's easy for me because I work with inspiring people. And so, the only thing I can really say is that the millions of people in rural Tanzania want to protect their environment. They want to join in and play this game. They want you to finance them so they don't have to cut their forest down. It's quite simple, not complicated. We don't have to make it complicated. It's literally that. So, for the lawyers and the corporate people in the room, go and work it out.
Great.
Well, I think that I'm in a very, very much same lines. I spend reasonable time in the field, and I'm always inspired when I visit and I meet some small holders or maybe a slightly bigger owners of forest who really see the future and really enthusiastic. I just actually came yesterday from Central America, from Honduras, and I visited some forest and forest owners who were really, I got very much inspired that there is hope.
Great. Yeah.
Yeah, I think that You can analyze the finance tools we had in this market 5 years ago and compare that with what we have today. In addition to, I think that it is clear that there will be a huge demand. I don't know if 3 times, 4 times, or twice what we have today. So the combination with both, it is clear that the institutional investors and financial institutions will find a way to fund our projects. It is only a matter of do the right connections and explaining things on the right way. I think that the most difficult thing in one market is demand, because you cannot create demand, and that is a strong thing in this market. We have demand of investments on nature and carbon credits, so let's work together to make that happen.
So there's hope and books. Thank you very much.